Welcome to the next in our series of talks on capital allowances. This week we're starting to look at the topic of apportionments. As ever, let's begin by considering the statutory position. This takes us very near to the end of the Capital Allowances Act to section 562, entitled Apportionment where property sold together. This section contains two key provisions. First, it tells us that if two or more items of property are sold as a result of a single bargain, then they're treated as being sold together. This applies even if separate prices are agreed or if the sales are apparently separate. Second, the sale proceeds of any asset for the vendor must, for capital allowances purposes, be calculated using a just and reasonable apportionment. This is then mirrored for the purchaser, for whom the price paid for items on which capital allowances can be claimed must again be calculated using a just and reasonable apportionment. So if I sell you a property, the starting point is that the capital allowances value of any given fixture in the property must be a properly apportioned figure. It's not open to us to decide to allocate, say, £50 to the fixture and the rest of the payment to something else. The requirement to use a just and reasonable apportionment is set clearly into the legislation. In practice, of course, the fixtures election sorts out the transfer value of fixtures for most transactions. But we should note that the just and reasonable apportionment requirement is not restricted to fixtures. Indeed, it's not even restricted to plant and machinery, because section 562 is in part 12 of the Act, which applies for all capital allowances purposes. Even with fixtures, though, there are various circumstances in which an election will not be possible. This will be the case, for example, for integral features on which the vendor has been unable to claim. Another common scenario will be a property owner who bought the building some years ago, but who did not properly address the capital allowances issues at that time. It will be too late now to consider a fixtures election, so the starting point will be to see what capital allowances claims could be made on the basis of a just and reasonable apportionment of the purchase price. Suppose, for example, that a business bought the freehold of its offices back in 2007 and now realizes that it did not adequately address the capital allowances issues at the time. The business confirms that it did not sign a fixtures election, so the correct statutory approach is to use a just and reasonable apportionment, even if the parties had some agreement saying that just £100 perhaps was being allocated to plant and machinery. So, can we go back and reopen the computations from 2007? No, because we're out of time to do that. But what we can do is to consider an additional claim for the current year or for any year for which computations can still be submitted or amended on normal self-assessment principles. This can raise a number of complexities in practice, and we may have to consider claims and disposal values for earlier owners. We'll explore the issues in a series of case studies in a few weeks from now. But the fact that the person who sold the property in 2007 did not bring in a higher disposal value is neither here nor there. The legislation requires an apportioned value for both vendor and purchaser, and the fact that it may be too late for HMRC to pursue the vendor is not our problem. Next week, we'll look at how an apportionment is made in practice using a formula that is not statutory, but that is well established and that recently received clear judicial approval.